Hello, let's begin chapter 8. This chapter 8 is titled as, if I remember correctly, fraud, internal control, and cash, something like that. But I personally think that fraud and internal controls are, even though they are important parts of overall when studying overall company's activities, they are more related to auditing rather than these principles in accounting, which is kind of required course for all of the business students, regardless of their majors. So I will skip this fraud and internal control, but rather pay attention to the cash part. Here, let's stop and review where we are in this principles in accounting class. So we began in chapter 1 talking about the balance sheet accounting equations. What was it? Assets equals liability and equity, which is literally the relationship you can find at a balance sheet. Meaning, in a balance sheet, you can find assets and liabilities and equity part. Then, within assets, as we've studied in chapter, was it 5? Classified balance sheet. Assets can be classified into current assets and other long-term assets such as long-term investments, PP&E, like tangible assets and intangible assets. Likewise, we can classify liability as current and long-term and equity. And here, what I want to say is within current assets, you can find a lot of different items such as cash and cash equivalent, inventory, short-term investments. Maybe I should have written down short-term investments and inventory. Inventory, prepaid expenses or assets, and the like. And we know that what I'm trying to say here is this cash and cash equivalents is what you study in this chapter, chapter 7. Inventory, we've already sort of studied it in chapter 6. And oh, I missed something very important, which is accounts receivable. Which is a chapter 9 topic. And then we studied these topics, PP&E and intangible assets in chapter 10, current liability in chapter 11, long-term liability, if my memory serves, it's chapter 15. Equity from chapter 12 to chapter 14. And short-term and long-term investments in chapter 16, I think. So we are sort of in this chapter studying the first item, right? Cash and cash equivalents in the assets part. Okay, and then from now on till chapter 10, we will cover the assets part, and from chapter 11 to chapter 15, the textbook covers liability and equity part. Okay, that's the big roadmap from now on till the end of this textbook, I mean financial accounting. Right, then let's talk about cash. You know cash, right? What are cash? Usually companies have their own accounts in their, the counterpart, I mean, in their banks. But companies often need to maintain their own cash in their, for example, safety deposit. Not a big amount like banks maintain, but companies often need to have some cash so that they can pay for postage expenses or taxi fares or the like. In such a case, many companies' choice is something called petty cash. Okay. Again, petty cash and cash, they are in reality the same, right? Petty cash is just cash that you maintain in your own office, right? So in reality, they are the same cash, but if you need, you can maintain a separate account in your chart of accounts, something called petty cash, and separate it out from your cash account. Again, for your company's record keeping purpose, you may maintain petty cash as if it is different from cash, when in reality they are the same, right? If you decide to do so, then petty cash is one of your assets item, which is different from your cash account. Okay, then let's make a case and then see what are the journal entries for this petty cash. Like October 1st, you set a petty cash fund transferring from checking account cash of $100. Oh my, not 1,000, $100 to the petty cash fund. And the purpose is at every month and like the first month end, October 31st, you need to replenish up to 100, meaning you want to maintain the balance 100 at every month end and begin a new month, fresh start with 100. Okay. All right. Then what's the journal entry in this case? It should be your petty cash, which is an asset item, increases by 100 while pulling out money from your cash account. So it will be an increase on debit side, petty cash, but also decrease of the asset side, which is cash. So on the debit, you have petty cash, 100, and on the credit side, cash 100. Okay, that's case 1. Case 2. On the month end, you opened your petty cash fund and then found receipts such as postage, say $80, and freight like UPS of $15, and other miscellaneous of say $4, with cash left unused of $2. Maybe it doesn't make sense. Okay, cash left unused of 50 cents. Okay, in this case, what do you see? You see that it still doesn't make sense, right? What we have is the receipt of, in total, $99, which means the cash left unused should be $1, not 50 cents, right? Something is off. 50 cents mismatching is out there. Then what should you do? One option is you track down all the receipts and cash and contact all of the people who had access to the petty cash fund, and all of the employees checking out, where is my money? Where is my 50 cents? Spending your precious 3 hours or maybe 3 days, right? Do you think it makes sense to figure out that 50 cents, where the 50 cents are? Maybe not so much, especially for companies, right? In such a case, you may just dump this mismatch in an account called cash shortage and outage. Okay, all right, then let's prepare journal entries. First of all, you should record all of these expenses: postage expense, freight expense, and miscellaneous expense, right? And then what else you should do? $80, $15, $4. And then what you should do is you're replenishing the cash. How much cash do you replenish? You need to replenish as you have only 50 cents. You should replenish 99.50. So you can say that you've used up petty cash. Oh my, I'm in trouble. Yes, I don't have much space. Okay, let me write down on the next page again. Case 2. We've used up $50, and receipts show postage 80 cents, freight, 15, and miscellaneous, was it 4? Yeah. Then your journal entries are postage, expense, 80, freight, expense, 15, miscellaneous, expense, $4. And then you need to replenish, you need to debit petty cash. How much is it? Indeed, what you saw is $99.50, $99.50 used up. So you need to replenish petty cash by transferring cash from your checking account. And we see that the sum of the receipts is only 99. We needed to have some account as studied, like cash short and over, shortage and overage. Okay, so far so good, but my question, do we really need to do this, right? Subtracting and adding the same, right, in the record? This is sort of redundant, useless. So why don't you just erase it? Right? This is your journal entry that you should do on October 31st. Again, this does not look very neat, so let me write down again. Cash over and short, 50 cents, and cash, 99.50. Okay, then let's see another case. Case 3. On November 1st, you feel that, oh, we've used up most of 100, right? So maybe it would be better to increase the fund to 130. The petty cash. Then what's your journal entry? They should be just petty cash, 30 with cash, 30 being credited. Okay, right. This is your record keeping of the petty cash fund. Okay, and in the next video, let's have a look at the bank reconciliation, and then continue talking about the cash. Right. See you there.